Hello, today we will discuss about the topic in performance measurement. It's very important when you run the logistic and supply chain. You have to know about performance measure and what the factor that you can measure them and then its impact to your organization and how you fit your supply chain and logistic together. If you have any question, you can scan QR code and ask me in social media, or you can chat to me on Line application. You can see cost planning and assessment that you can see we have now week 12 and you can see week 1, week 2 or to 11 that you can see in here, and then you have to review the topic, and then the next week we will present final presentation for your team project. We have 2 weeks for presentation 1 and with presentation 2, and the last we have a final examination. In here you have to know about how performance measurement, that the KPI that link to the organization and link to your activities, that you can see the measure and factor that link to supply chain and logistics. Performance measure that you have to know about the measurement system objective, operational assessment and financial assessment, that 3 dimensions of performance measure. And now you can see the measurement system objective that link for part of this. The first of all we call the innovation and learning perspective, and the internal operation perspective and customer perspective, and the last financial perspective that we call balance scorecard. The 4 dimension for this that help you to monitoring, controlling, direction, and balance scorecard, balance everything in your organization. So you have to monitor in innovation and learning perspective, and internal operations perspective and customer perspective, and the last financial perspective that link to the control plan and everything that you have to know in day to day and week and month to month, and you have to review everything so that impact to your performance in week and in month and in quarter and a year linked together. And next you have to know operational assessment. So in here you can see the operational assessment that link to functional perspectives, design, cost management, customer service quality, productivity, and asset management. You can see cost management that you have to know total cost or cost per unit that link to your service and product, and cost as a percentage of sale or inbound freight, outbound freight, and administrative warehouse order process, direct labor, comparing of actual versus budget, that the link to the cost from your expense and the cost that you have to pay, and you have to know this, and then you compare to revenue, you know the profit. So the cost of everything is very important: inventory, warehouse, return goods, damage, service failure, or back order. And second one, that customer service link to the customer certification, the fill rate, stock out, shipping or error, the on-time delivery, back order, and cycle time. Everything that link to customer service and customer certification. And next one, the qualities that link to product and service. The damage frequency, order entry accuracy, picking, shipping accuracy, that's linked to the service for your logistic and supply chain. And the productivity that link to input and output, the unit shipping per employee, the one employee can do the shipping unit, or one money or $1 that you pay, you have to know the revenue or the cost that link to unit per everything. And order per sale and representative comparison to historical standard, or goal program productivity index, something linked to index input and output, and then you have to compare, you know, performance in your organization. And the last, how you manage the assessment that we call return on assets. When you use asset and then can create or generate the money to you, inventory turn, inventory levels, number of day of supply, obsolete inventory, or return on net assets, or return on investment, or ROI, or inventory classification, or ABC and economics, value added, or EVA. That 5 dimensions that link to the cost management, customer service, quality, productivity, and asset management that link to how you manage operation and how you assess operation. And the functional perspective customer service that the example for item fill rate, you can use this formulation. The number of items delivered to customer divided by number of item ordered by customer. Or line fill rate, you know the number of purchase order line delivery complete to customer divided by number of purchase order line orders by customers. Value fill rate, total dollar value delivery to customer divided by total dollar value of customer order. That here you can see the formulation, and then you know the fill rate, the line fill rate, the value fill rate, and order fill rate. That help you to understand about function and perspective. In this slide, you understand about asset management. You can see the formulation for inventory turnover. We use COG, or cost of goods sold, during a time period divided by average inventory value at cost during the time period. You can see is the fit that the same time period. You use month, you have to use cost of goods sold in year. You have to use average inventory in year also. Or if you use cost of goods sold in the week, you have to use average inventory in the weeks also. So you can see inventory turnover have a lot of formulation. You can use sales revenue during a time period divided by average inventory value at selling price during time period. Or you use units sold during a time period divided by average unit inventory during the time period also. We have 3 formulation for one answer. Inventory turnover that help you to understand how you move inventory fast or slow, and have to compare to the other competitor and the other industrial sector also. And measuring customer relationship, you can use perfect order, absolute performance, or customer satisfaction. So you can see here that link to customer relationship, and then you send the product, and then you compare to the other order, and then you check the time and the quality and the product condition that help you to understand the operation. And determining approach metric that you can see we have 3 dimension or T part of this. The first one is competitive basics, and the second one measurement focus, and the third one measurement frequency. You can see in here the first one and second one and third one. In operational and structuring, or in monitoring and diagnostic, and competitive basic efficiency and responsiveness. That the other side for this performance. This slide shows supply chain comprehensive matrix. You can see in this, you understand about total cost that the raw material source, initiate production of basic component, and manufacturer, distributor, and retail that we call total cost. And cash to cash conversion, how you manage the cash and then convert to the cash again, that we call cash to cash conversion. And how long the inventory day for supply, that we can call DOS, or day of supply, or DOH, day of inventory on hand, day of inventory on hand. And due time on shelf, in stock present, and supply chain total cost, that you can see the picture that link to raw material source, initial production of basic components, manufacturer, distributor, and retailers. And the last, supply chain response time, how you respond your supplier, how you respond your customer, how you respond to wholesale and retailer, that you can respond everything, that you have to know the times. That is very important supply chain competitive metrics. The benchmarking is very important when you have to know the number, and then you have to compare to the other. We call benchmarking. How you compare? The first one, you can compare yourself this month and last month, and then you compare, we call individual. Or you compare your department and the other department, we call department comparing. And you can compare your company to the other competitors we call company levels. And then when you know the company level and your other competitors, and then you can compare to the other industrial sector. It's like you run the fashion, you compare to the construction that we call industrial sector. So you can use the number and then compare it. And cross industrial sector also, and sometimes you can compare to the best practice or the best organization or the best result, and then you know the gap between you and the best target. If you get the 5 and then the best practice get 9, you can compare it and you know the gap is 4. You know that the 4 that link to your operation, your logistic and supply chain activity. So you have to improve your logistic and supply chain, your activity to close the gap from the 4 that you know this. When you know the performance, and then you can use information technology and measurement to help you to get the data, you know the number, and then you fill in the form, fill in the paper, and then you have to fill in the system that we call information technology and measurement. That you can see the customer service. When you see the percentage of high index and achievement firm, you can see 95, 92 or 93, and the percentage of average index achievement firming that 56. That you can see customer service, cost management, quality, productivity, and asset management. And then you compare with achievement, achieving firm and percentage of average index. That's why you know the gap, and then you improve your performance with IT, and then you use this. We can see everything that is like the dashboard when you drive a car, and then you see the kilometer, the mile, kilometer per hour, the number in the fuel, and the dimension in here. You can see the factor of that. It's linked to the how you drive your car. It's the same thing when you run the organization. You have to know the dashboard and then link to the driving. You see the number, and then you use the mirror to see the backs. You see the real in your road when you drive, and you see the font, the target, and the marketing and customer. That's the same thing in here. And financial assessment, that is the very important the dimension to link to revenue, link to the cost, that you know we call cost revenue analysis, that link between revenue and the cost, and then you use the number of the product, and also with that you can sell multiply by the price, you know the revenue, and then you minus with the cost from the expense, every cost on your organization or expense that compared to here, and then you minus it, you know the profit. So the cost revenue analysis, you can use the public accounting practice. You can see in the balance sheet that you can know this when you run the business. You see the balance sheet or income statement. You see income and expense that in income statement, and then you use contribution approach to link to the contribute from the part of cost or part of revenue, and the net profit approach. You can use the revenue minus with cost, and you know net profit, and then you cut with the interest, cut with the any expense that link to net profit, and you use ABC. We call activity based costing, that link to activity or process in your organization, and then link to the expense, the same thing. So you can use 4 types of this to estimate the financial assessment also. And this show the strategic profit model that is come from DuPont model. You can know the net profit margin, that you want to use your asset 10%, or we call return on asset 10%. When you use asset $100, you get back $10, that we call 10% return on asset. So return on asset linked to net profit margin and linked to asset turnover, that 5% and 2%, and 2 for asset turnover, and 5% for net profit linked to net profit and sale. You can see the net profit 100, so sale is 2,000. If you want to increase the net profit, you have to increase the net profit, or you have to reduce sales, that you know net profit is higher. So you know sometimes you sell reduce but net profit get more than the baseline, so that adjust from the number, and the net profit is coming from gross margin and total expense. 500 minus with 400, and 500 gross margin is come from sale and cost of goods sold. The cost of goods sold that minus with sale, you know, the 500 is gross margin, and total expense is come from variable and fixed. Variable 300 and fixed 100, and then plus together is 400. So you can see the upside that in the diagram show net profit, and the downside in the diagram show assets turnover. You can see the sale and total asset, and then the total asset linked to current asset and fixed asset, and also current asset linked to inventory and the money in your account and account receivable that link to the balance sheet. And net profit margin and asset turnover and application for this idea is very important for strategic profit model. And this table show the requirement for financial report. You can see supply chain business process from plan, sort, produce, store, transportation, sale, and return. And then you can see the supply chain transaction and the financial report, and the financial report element and the supply chain report that link to the factor in your organization. And then you align all of performance in the same direction. You can align with plan, sort, produce, store, transportation, sale, and return with idea. So you can see when you know the number, the performance, and then you know the number from 4 dimension from innovative and internal process, and learning from your staff, and how your customer is happy or not, and then link to financial model. That's here why you have to adjust the dimension of this and link to the operation in your organization that align or everything of performance in the same direction. That look like when you drive a car, you have to adjust and align your wheel and your tire and your suspension, all of things is the same direction. When you going on, go for it, you go through that link to the first one, or sometimes you want to turn left, that turn left from your drive, or sometimes you want to turn right, you turn right, that link align or performance in the same direction. That's here why performance management and performance management is very important. Sometimes we call KPI or key performance index, that you know this. And here the question that challenge your question. We have 4 questions for this. You select 1 question. The first one, what do you think are the difficulties faced by companies such as the Gillette Group or Genius in developing measurement system that provide real-time information concern logistic performance? Consider the Genius example of measuring on-time delivery rate than on-time shipment in your answer. Or sometimes you suppose you work for a small company with a limited ability to invest in technology. What action might you take to provide you with measure information that larger firms such as Gillette Group and Genius option through technology investment? The third one, what do you think are the major barriers to implementing customer and product profitability analysis, such as that done by Sunny Delight? Or the last, that what type of decisions other than those discussed in the example might Sunny Delight and other firms improve through details customer and product profitability analysis? So enjoy your class today. Thank you for you see the clip, and then don't forget to scan QR code for check-in for this class. And if you have any question, you can ask me, and then if you want to know more about the theory and the practice, you can read it, the supply chain logistic management textbook that I give you in the first class. Enjoy your class today. Thank you very much.